Good evening, everyone. It is Saturday evening, 8 o'clock. I did not really do anything except look at some charts earlier today, but wanted to tell you about what could happen for next week, just for my situation. So here you have your disclaimer, as we always start off with. But I also wanted to show you something when it comes to getting assigned. Let's take a look. TQQQ, I've been thinking it's going up higher and higher and higher. I want you to take a look at this row right here. All right. So I sold someone the opportunity to take away shares at $87. I really didn't care if it went beyond that or not. I committed to getting out at $87. So instead of using a limit order to say sell at 87, I sold a call. Now take a look. I sold it at the time, it was for 90 cents, and there was a 26% chance that it would go through $87. So the fact that it was a 26% chance means that at the time that I did this, the price of TQQQ, which is following the NASDAQ, but triple leveraged, well, it was out of the money. Okay. So now, if we see, again, it's Saturday, the markets are closed, but here it's showing that the closing price was $92.16. Okay, that's fine. So I missed out. I missed out on $5.16. I really missed out on $4.26. Because don't forget, I collected 90 cents here. Am I going to cry about it? No, no. So what am I going to do next week? Okay, so I missed out on those $4. It's not the end of the world. So, sometimes, when you buy a property and you sell it and you look at it maybe 6 months down the line, you're like, I could have sold it for $50,000 more. You were comfortable selling it at the price that you sold it at. Don't get bogged down about on things like, hey, I could have, I should have, I didn't do the right thing. No, you did do the right thing. Now, if you want to get back in, what are we going to do for next week? We're going to take a look at TQQQ. Okay, and for next week, you'll notice they took away a few of my shares. Not a problem. So what did I do? I handed them over at $87. As you see here, I put assigned. So they took away a few of my shares. I had sold 5 contracts, so for 500 shares. If you remember, I had 1,100 shares last week. I now have 600 shares this week. But what am I preparing for? Look at this. I am preparing to own 500 shares back next week if for any reason the price goes below $84. Okay. So in this case, I would get back the shares at $84, the ones that I just handed over at $87, as you see here. So if the market next week drops and I get the shares at $84, I'm all right with that. Why? Because I handed them over at 87 and now I get back in at $84. Okay. So that was a $3 difference, which is fine. Now, some of you might be like, well, you know what, Yasa? You just said you lost or you missed out on $4.26. Okay, fine. And if I had to hand them over at 87, fine. I'll wait till next week and we could take a look at the 82.50s. If the market comes down and the VIX goes higher, then I'll look to sell the 82.50s. There's nothing wrong with that. Remember, I'm hoping to stay in this for a long period of time. And so if we take a look at this VIX is at 1610. Well, let's take a look. So this is the volatility index that's going to follow the S&P 500. This is a weekly chart. All right, well, let's look at a daily chart. And that daily chart is telling me, oh, wow, went down to 16. Wow, closed at 1675. All right, so where is this 1610 coming from? Okay, the bid is 1610. The ask is 1740. So what we're going to do is we're going to look and see where's the next level of support for this VIX. Oh, it's showing 1550. All right. Will it go down there? Will the fear subside all the way down to this fear index of a 1550? I have no idea. Will it come back up next week? I have no idea. I don't have a clue. All I know is the plan that I have in place right now is since I handed over 500 shares at $87. I want to get back in at any price that is below $87. And so what did I do? I decided to sell this 84 put. And if I get to sign the shares next week, at the end of next week, that's fine. If not, it's okay. And before we end, I wanted to share something with you really nicely. I sold this put and I sold this call. And guess what? When I look at this over here, the call had a 30% chance, or still has a 30% chance of expiring in the money. The put has a 10% chance of expiring in the money. The beautiful thing about this is now all I had to do was let time pass and notice I'm getting a little bit of profit in each one. So if this stays right where it is all week, this works out beautifully for me. Why? Because I just want the theta or the time to decay, decay, decay. So that's the beauty of owning the shares or wanting to own the shares at a lower price, because all we need to do is just wait. We just need to be a little patient, let time pass, collect a little bit. Now, some people will ask me, well, what if you missed out on such a ride up? I'm doing this every single week. I'm doing this sometimes multiple times a week. So what you're seeing is that there's always an opportunity to get something. There's always a time that you can guarantee yourself something. The net liquidation can certainly go up or down, but I don't know what happened here. That's okay. But nonetheless, I think I know what just happened. So what just happened is it's showing that my shares got taken away. My net liquidation just dropped substantially. I don't know why, but by Monday, it'll be right back up to wherever it was for the close on Friday or Saturday morning, whatever it is. And we'll be right back into trading. And we do this week after week after week. Before one more thing, I want to take a look, even though the markets are closed, I want to see what kind of put would be the optimal one to sell for next week. You know, I like to look at 25 deltas. That's just me. And I like to look for 1%. This is going to be off this bid-ask spread because the markets are closed, but let's just take a look and see if we can find anything. All right. You know, so now it's telling me that I should sell the 88 for next week, but I don't want to do that. You know why? I just told you I handed over the shares at $87. So really, even though this is telling me that the optimal candidate is supposed to be, for me, at least for me, and my risk tolerance, it's $88. It's the $88 strike. But in reality, I really don't want to sell anything less than an 87 strike. Why? Because I handed over shares at 87. That's just me. Anyway, if you like this video, just hit the like button. If you do have questions, please put them in the comments or reach out. Again, trading is not for everyone. You saw that disclaimer. You could lose all your money. You could lose more than all your money. So please, 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 pretty please, be careful with what you're doing. And if you do have questions, please reach out. Reach out to someone. If you don't want to reach out to me, that's fine too. But reach out to someone so at least we can get you you can get yourself the right help and make sure you're not really led astray. All right. Happy trading, everyone.